Okay, so we're going to go in quick succession, 4 companies. As you know, I don't like slide presentations, but hey, we have to do that. As the speaker starts, there will be a poll question. So any time during the 10 minutes that a person speaks, you can go online, and the question is broadly like, are you now more likely to invest in this company? Yes, no, or never, or something like that. No? So give the speaker, perhaps you just don't like him because he's an English geologist or whatever, and then you vote no. Okay, so right. Perhaps you want to hear a bit of the story, it doesn't matter. It's just sort of tongue-in-cheek, don't get too serious or too offended. But so somewhere during the presentation, you go to Slido and you express your view. Okay, simple enough. No, we can do that. 10 minutes presentation, 5 minutes Q&A. Are we ready? Settled in, caffeinated up, everybody is offended, we're all good, we can go. I'm going to ask, Pine is standing in. Pine, you cracked the invite here through the back door. You better, you're open for abuse, dude. Come. Give us a story here.
Okay, good. I'm a bit under pressure because I've got a 35 slide presentation and I've got 10 minutes, so it's 30 seconds a slide. So strap in, and I assume you will get the leisure or go onto our website if you want more detail. Okay, so just hold me accountable for anything that I've said here. That's the normal thing. So as I've indicated, this project was in care and maintenance since 2015. We revitalized it, and we've basically dusted off, relook at all of the sort of technology opportunities, and we're moving rapidly forward with our scoping and pre-feasibility study towards the end of this year. Where are we located? So we're in the uranium province of the Uranga region in Namibia. We are really blessed with infrastructure. We are 25 kilometers from the railhead. We're 25 kilometers from the main B2 west-east highway. We're 25 kilometers from the Rossing Reservoir water connection point. So we basically have all of that major infrastructure there, close to the port of Walfish Bay, close to the international airport of Walfish Bay, and an excellent jurisdiction for our project. So our project consists of 2 main deposits. The Valencia uranium deposit was the main deposit that was initially discovered, and in 2011 the company started drilling the Namibia deposit, and we've basically now purchased the farm Namibia so that we have ownership of that land, and we will be going in the next few months to continue and do infill drilling to upgrade the Namibia deposit. So our project production target is 4 to 5 million pounds per annum. That will put us, as one of the larger new mines that's in the target sort of production ranges. We obviously, because of the low grade, we have to push tonnage to get the economies of scale, and that's basically what's driving that, and it will give us roughly 17 to 20-year life of mine. I'm not going to talk about the uranium market. We know there's a big gap of 150 million pounds over the next 7 to 8 years. The world right now needs 7 new Norasa projects, just to make up for what the current shortfall is between production and consumption. So the opportunity is there. We've seen that the spot prices has gone up and it's retracted a little bit. It's on its way back up, but the long-term prices has continued to do a slow rise. It flattened out a little bit, but we know in the market, companies that are signing long-term offtake agreements at the moment does that with sort of ceilings at 125 and floors at 65. So we in that ballpark. I'm not going to talk about the capital structure a lot. We basically have one major shareholder that owns 35%. of the company. We've got a few big institutions that owns 15 and 10 and 12%. And management has got a good exposure in there with one of our major shareholders that obviously owns a big chunk of it. Our market cap has been fluctuating between 100 to 150 million Canadian, and we obviously hope that we'll bounce back. We are very blessed with the project team that I've put together in Namibia. I think we are one of the few juniors that has actually got a team that can go, provided that we get the funds, go and execute this project. So these guys has been around, built uranium mines in Namibia. They've been through the process, so very blessed to have a very excellent technical team. And obviously DRA is our engineers on the job, and a very good partnership there between Forsys and DRA. Okay, so we've just acquired the farm. We are looking at some neighboring EPLs to expand our footprint in the area. We're currently in discussions with those EPL holders, and that will just give us additional grout and further drilling. There is sort of our current published resource. So in total, we sit with about 88 million pounds. We will go in and upgrade the Namibia resource, and that will then bump that 42 million pounds up to indicated. And I think with the additional extension drilling that we have been doing over the last 18 months and going to do in the next 6 months, we will be on the other side of 100 million pounds in our next MRE update. So milestones, we've got a couple of key milestones that we're driving towards. We're pushing for a pre-feasibility study towards the end of this year. There's some areas that we did some additional infill drilling. All of that will be put into our mineral resource update later this year. Those are just some of the models. As you can see, we've probably drilled out most of our resource, but it is obviously very important that we do very good work on our pit modeling and pit optimizations. We're now looking at electrifying our entire mining fleet, and we really want to go green in that regard. And mining costs is half of our operating costs, so a lot of attention has been given there by optimizing that. Just some of the intersections. We've also recently had some very good intersections that we drilled. We drilled a 220-meter hole, and it was mineralized from top to bottom at about 230 ppm. So it just shows you large scale and continued mass uranium mineralization. So recently we had our first blast on site. That is in preparation of our first box cut for some pilot work that's up and coming. We're going to do some work with ore sorting technology, and for that, obviously, we need more bulk sample, and we've done that first blast. So that's Namibia. We've got a very exciting abnormality that has never been tested really on that deposit. So we call it abnormally A, and we are exciting to go into that area. It's got a much bigger radiometric sort of signal compared even to the Namibia. So maybe I stick 3 or 4 holes in there, watch the news, and maybe we have a third massive deposit, you know, just right next to the Namibia deposit. So we've changed the process from originally that was envisaged by the previous regime as a tank leach operation similar to rossing uranium. We're now looking at a heap leach operation, and most likely we're going to see a combination of ore sorting and heap leach, and that's what the basis is for our design moving forward. Just some fancy pictures of work that DRA has done for us on the 3D modeling and the layout, and that just gives an overview of where we're going to mine, put the waste, where the racetrack will be, and obviously the ultimate Ripios areas. Analyst will probably see some of her pictures here. So that's some of the radars technology that we are evaluating, and we will actually have a workshop tomorrow at the DRA offices evaluate the first sort of results and start modeling the economic potential of this technology. Some flow sheets, that's for the process guys, if you want to have a look at it later, how we want to incorporate that. So I'm going to end up here. This is the 30-second speech. So Norasa is in one of the best jurisdictions. I don't say so. You already voted it. So it's confirmed. Project is driven by a very, very experienced team. Our project is already fully licensed for the Valencia deposit. We've got both mining license and environmental clearance. So in essence, we're shovel ready. We're just waiting for the market, to lock in those long-term offtake agreements that will support the funding of the project. We're probably going to need a bigger brother to come along our side down the line to do that, but that's where we are. Huge of expansion opportunities. We're applying for some additional EPLs in that area, and we're looking at hybrid technology mining, ore sorting, HPGR crushing, heap leaching technologies, and I've already spoken about the opportunity for us to use solar PV and potentially go completely off-grid for this project. Thank you, sir.
Oh, thank you. Thank you. So, take up your tools of mass democracy, express your views. A question, putting target production aside, then let's not talk about size. What are the advantages, disadvantages you have versus other uranium mines projects in Namibia? Perhaps relative grade or strip ratio. So why you as opposed to the other guys?
Yeah. So the Valencia project is obviously the lower grade hard rock projects in Namibia. So if we can compare that to a Rossing or a Husap or even a Bannerman, I see Bannerman is also going to have the presentation. We are the lower grade, but we are fairly lucky that our strip ratio is substantially lower. We're very close on the Valencia deposit now, pushing a 1 to 1.1 strip ratio. If you look at Husap, they've got a grade of 500 ppm, 600 ppm, compared to our 130, 140 ppm, but their strip ratio is 1 to 7. So that makes a big difference. So yes, sometimes you have grade, but you unfortunately have to dig the cover away.
So for a company that's in the early stages, you are into lots of other technologies. It sounds like out of necessity in order to upgrade. Does that introduce risk, or is it overall going to decrease the risk? All these new things you need to do, from heap leaching to sorting to whatever.
Yeah, I mean, new technologies applied in the uranium industry, I think. We obviously will follow the normal, demonstration and de-risking of those technologies. I know financiers hate the word of, new technologies. It always makes them nervous that you introduce additional technology risk into a project. But these are not unknown technologies. I mean, they are working in other commodities. It's just applying that specifically to a low-grade uranium project.
Quick question, any byproducts?
Nope, unfortunately, just uranium.
There are questions around, has a PEA been done, and where are you with your DFS?
So we've completed an internal PEA, and we've decided that there's a number of other opportunities that we first want to, fully evaluate, including ore sorting and the electrification of our mining fleet. And then once we've got the definitive answers to those, we will then basically rerun our in-house PEA, but we continue with the engineering definition so that by the end of this year we will have enough engineering definition to actually publish a pre-feasibility study compliant to a 43101 instrument.
So what is it that you guys export in? Yellow cake?
We will export yellow cake.
And is there ever a scenario, it's actually a question, where this, instead of exporting yellow cake, you may have it processed further through partnerships with Nexa or people like that? Or where's your yellow cake going?
Well, normally your client to whom you sell it will nominate to which converter the product will go. We do know that the Russian government and our government has started to have discussions on value addition to the Namibian uranium, especially if we're going to be 6 operating mines. We probably get to that point where it starts to make sense to do that. But even 6 mines is not enough, to actually build a converter. You probably need 20% of the world's production, to really justify a standalone conversion facility.
So, the cynical question I can answer, but I'm going to read it to you. Considering historical prices over the last 10 years, would the operation have been under break-even during that period? So, with the prices of the past, would you have been viable?
No. Our project requires at least a 60 to 70 US dollar per pound of uranium as a sustainable price. Many years, the low-grade uranium projects, we are unfortunately on the wrong side of the cost curve.
Yeah.
So the only way to make this business sustainable is to wait for the market, go into the market at the right time, forward sell your uranium with floors and ceilings that will protect you, for 7 or 10 years, and make sure that you are sustainable, that you can ride the waves and survive the waves.
Ladies, gentlemen, I don't know what the polling was, so that's without me, so I was very interested. After this presentation, how do you feel about this as an investment? Let's wait and see. Hey, you caught some people here, and then I know who voted definitely not. Thank you very much.
Thank you very much,
sir. Okay, that's exactly how we want it done. Brief, to the point. A few questions. I know you guys go all over with the questions. I mean, you really want me to ask this guy about the relationship between Russia and the US. Are you confused? He's not a golf player. Okay, so get back in your lane. My goodness. I still have a notebook, somebody's notebook. It's the most neat handwriting I've ever seen. So I don't want to say it must be a woman, because then a guy stands up and he's got neat handwriting. I've got somebody's notebook. I'm going to start reading the notes. That will make you come up. I may read them aloud if I find juicy bits there. Okay. We are off to Jonathan. Where's Jonathan? Are you ready?
Always.
Always. You were born ready. Jonathan is going to talk to us about Central Gold, which has got nothing to do with gold. Huh? Off you go.
Yeah.
There's your... And that's your time. I've stolen 3 seconds of your time.
All right. Good morning, everyone. I'm just going to talk about a greenfield discovery in an interesting part of DRC. Where we are is up...
Jonathan, you can look there if you want to.
Okay, yeah. Where we are is up near a place called Moba, which sits on the southern end of Lake Tanganyika. What attracted me to the area was it actually has the same geology as the main copper belt, as the Lithilian Arc. It's got Lower Rhone, it's got sort of Kundalungu rocks. It was briefly explored in the 1970s by BRGM, but they did not uncover a significant deposit in the area. However, there are numerous copper showings and gold showings in the area, and it has all the right characteristics for a new major deposit. What we have is a small exploration license, about 18 square kilometers. We've done some soil geochem over the license, and it shows a broad 5 by 1 kilometer soil anomaly. And at the main site, which was recently discovered, we have artisanal, we have samples which grade up to 25% copper. We also have, which I'm not going to talk about now, a gold license further north, also in Tanganyika province, which sits on a big alluvial goldfield which has been mined for almost 100 years. But that's not the major focus of our company right now. What we are seeing is we've got a clear route to value where we're going to do the exploration, and we're basically targeting a copper belt style a deposit, which we hope will have 250,000 tons of contained copper, and that's our aim. Alongside that, we also want to set up a small copper concentrate project, because there are sort of numerous copper showings in the area, and there's a possibility to use the connectivity that Lake Tanganyika offers to produce a concentrate and export it into the international markets. We're a simple ownership. We are a Mauritian company, majority owned by management, and as I said, we also have a 25-year gold mining license, but that's not our current or main focus. As a team, I've got over 20 years experience in the DRC. I was involved with the Daziwa discovery, also a discovery in Bar Congo called Bamba Kalenda, and a gold discovery north of us in South Kivu called Misisi. Jules Mulia is my key guy. He's based out of Kalahari. He's head of the local business association. He was born in Moba, and he brings a wealth of junior mining and ESG operational experience to the role. I'm lucky to have a good project manager. He's an Australian. He's called James Sullivan. He lives in Dar es Salaam, and he was one of the first sort of project geologists for the Moto mine, which is now sort of Kibali, run by Barrick, you know. And so he's going to take the project through the various stages of exploration and feasibility. Just on the group structure, as you can see, we're over 70% owned by management. I've got a few key investors, you know, and we've raised $500,000 sort of to date. And we've had an income from Chinese subcontractors on our gold license over the last couple of years. Although I have to say, with that, that's not something that you can really forecast. You know, although it's something we hope to sort of get, but you only have a 6-month mining season up north because of the weather and those roads. I think those roads we saw yesterday are more common up on the gold license. So what do we have? We have this copper pit that was discovered 3 years ago. Small pit, not big, but very high grades in the pit. The locals mined some more, but largely there's no processing plant, so they all just sort of sat on site. What I like is this vegetation clearing, which is a classic sign of copper mineralization. And you see a lot of this in the main copper belts, and it's certainly present on our license. Just to show you a quick overview from sort of Google Earth, you can see sort of back in 5 years ago, there was nothing. It was just a field of maize or beans. There was a small discovery back in 22, and then there's been more extensive workings in the last sort of 12 months. What do I think it is? I think, and I'd show you that DTM image at the bottom. I think we are possibly looking at a deposit that sits in the nose of a tight fold in sort of Mwasha geology. And you're not far from the basement here, which means that, and a lot of copper belt deposits are an interaction between basement geology and Lower Rhone or Kundalungu. And it's the same here. We have, it's called the Mahila complex, very close by. And what I like is that there is a bit of gold in the fluids. And in the basement sort of geology, you find a lot of gold veins and small gold deposits. So I'm hoping that what we'll find is that these fluids have come from the basement and they're primary fluids. And we'll hopefully find something that, you know, is a nice sort of deposit, probably not a huge footprint, but hopefully very high grade, that sits between the basement and the surface in the Copperbelt rocks, in the Mwasha. We're doing some ongoing trenching along strike of the main copper working, and we're finding copper in the zone along strike. So we've already extended the zone by a few hundred meters. And you can see there's a copper alteration in the bottom of the trenches. It's fairly leached on the top, but that's what you often find, is you've got to then find where's the supergene zone where the high-grade copper has been developed. So what are we doing? I think we're continuing with the trenching, and we are getting an IP survey in just to test for development of shallow sulfides in the area around the pit. And what we see in the bottom of the pit, let me just go back a couple of slides. In the bottom of the pit, we are already seeing some sulfides, which is different from the main copper belt, where you often find a big thickness of oxides. Here we're finding sulfides fairly close to surface, which means that the IP should pick these up, and hopefully we'll find, and that will further define a drill target. We also got it's called a backpack drill. It's a drill that can drill down to 20 meters. Basically, that my geologist can use to drill, and we're going to drill some holes at the bottom of the trenches and see what we find underneath the leached layer, and we hopefully will find some high-grade copper, and that will then mean that we'll then have a bigger drill target to then drill down to 50 or 100 meters or more.
And in 20 seconds.
Okay, so we're looking at a $7 million staged investment. $5 million is going towards the exploration and the feasibility, and $2 million will go to setting up a small copper concentrate production. And we hope to, so with the exploration success, we hope to generate a very attractive return to investors.
Thank you, Jonathan. Guys, you know what to do. Do it. Go online and express your views. Many questions. On the question, WhatsApp, I typed, what the fuck is whatever. Because you guys with your codes, DTM, and then one of my clever people asked, what you call it, according to ChatGPT, DTM is a digital terrain model. You all knew that, I know. Yeah. I was the only guy in the audience who didn't know what that was. So that's questions answered. Thank you very much. Yeah. There are questions about the type of ore body. Too many geologists in this group, they tell you that this is more akin to an IOCG or an IOA deposit, Is it similar to the Kipushi-style mineralization? You don't know?
It's similar to, I think, it's similar to what we may see at a place like Sumeb, either a pipe or a Dikalushi. Or in Zambia, you have Kalengwa. Very high grade, but very limited in terms of its footprint. So and structurally sort of complex, sort of in the nose of a fold, So I'm hoping to find some sort of plunging ore body that links between the surface and the basement.
I'm not sure whether I should suggest to you geologists that you take a room or you take this offline.
I know, yes, I know.
But I mean, guys, really, do you really think we are interested in this level of detail? Hey? Jeez. Anyway, Tafik suggested you should get the arsenic out, as the US is looking for that. My goodness, guys. This part of the DRC where you are, how's that? Is it okay?
It's quite peaceful. It's very agricultural.
Well, the bottom of the question is, do you have evacuation plans? So, I mean, let's just put it all up there.
I think your evacuation would be to sort of get a boat on the lake and sort of zoom over to Tanzania.
When you said it's near the lake, I thought this was a geologist going on a holiday camp and it went wrong and you discovered something. Is this the real story, what happened?
Yeah, it's 35 kilometers in from Lake Tanganyika, and it's a huge lake, obviously the second deepest in the world, and offers tremendous future possibilities for logistics and transport, and an easy way out of Congo in an emergency.
And your current dealings with the DRC Mines and Energy Department as a junior explorer, and perhaps also, and what about the informal miners? I mean, just talk to us about the formal side and the informal side in conclusion.
On the formal side, it's pretty standard. You've got your cadastral in Kinshasa, and it's a cadastral system. It works fairly well. And we applied for the permits back in 22. There were no other applicants, so we got issued the permit. You've got to pay your annual fees. You've got to do your environmental reports. It's all pretty standard, and it kind of works. We are lucky or fortunate so far. We haven't had any invasion of artisanals. We have a good relationship with the local community and the chief in the area, and they are basically our big allies in sort of protecting the site, you know. But clearly it is a problem in many parts of the DRC, but it's not a problem that we have at the moment.
So what happened with those informal miners that discovered it for you? Where are they now?
They're just in the local village. It's literally,
Are they
we
still
employ
mining
some of
there?
them. No, they're not. So we employ them in the trenching sort of program. So we do actually employ quite a lot of casuals on the project.
So Central Gold is looking for copper in the DRC. I'm missing something here.
We've got a gold license.
Is that where the name came from?
Up near the border with South Kivu, which has obviously been the area where we've had the problems, and that's still got sort of long-term potential. But I see an easier route to value by focusing on the copper.
So you did one of these infamous pivots. You've pivoted.
Yeah. Although I would say, I do think that there's a good chance that there will be a gold byproduct with the copper.
Can we perhaps have a quick look at the audience response? This is South Africa, so 60% of the people vote for something. We have established that.
Fine.
In this case, let's wait and see. Your 7 million, was it pounds or dollars?
Dollars.
Dollars. Oh, it's a weak currency. Even us South Africans can afford dollars now. And then people who don't think this is for them, thank you so much. I really appreciate it, Jonathan. Thank you very much.
Thank you.
So you geologists, it's enough now. If you speak in code, I mean, really, I don't want to have to ask ChatGPT what the hell all these things are. I mean, do you think we all misspend our youth sitting looking at rocks? Is that what you think of us? Huh? So you've got problems. The next is the English geologist, the worst of the type. I mean, there are not even rocks in England. But he listed on the JSE, so that's why he's here. I mean, you know, one madman who listened to Patricia's sort of story. And we would like to hear the story all the way through, and why the hell did it make sense to come and do a secondary or inward listing in the
Yeah, I know you hate slides. I've only got 10. You'll be pleased to know, and there's not too much geology.
thank
Well,
God.
I did work here for AngloGold, so I thought I was a geologist when I left England, and then I started working in Western Ultra-Deeps and really learnt about geology and mining. So it's come full circle. I may even be employing my old boss from AngloGold as my non-exec chairman in the future, so that should be quite good fun. Shuka Minerals. We're listed in London, or our main listing is in London, and Patricia and Bernard and Wilma twisted my arm and said, look, you listed last week. It's the junior Indaba. There's only 6 junior mining companies on the, disclaimer, everything I say is a lie and all the rest of it. Yeah, they said, look, it's the junior Indaba, you've been before. Instead of sitting in the audience and asking daft questions, come and present. So, okay, well, I'll do that. So banged a few slides together. Yes, we listed last Wednesday. We listed at 75 cents. And thanks to some people in this room, I know for a fact, Mr. Miller, we're now at R1.75, so that's pretty good in a week. I keep being reminded, look, there's six juniors on the JSC. The last listing was 2 years and a month ago, Copper 360. Marula Mining have now stolen their GM, so Jana's now joined Marula, which is another company within our little stable. And I said, yeah, great, there's only 6 companies. That's 6 to choose from all you investors. We wanted to come here early. I'm not here to raise money yet on the Johannesburg Stock Exchange, but South Africa was built on mining. It's in your DNA. And I thought, let's get the message here early, let you understand the management, understand what we're trying to do, breathing life back into Rukwa and Kabwe, the 2 assets I'll briefly touch on. These are restarts, so there's no geology, unfortunately. There is geology, we've got a lot to understand. But yeah, I wanted to get the message here early. We're trading at 3p in London, R1.75 here. I'm not going to do a raise below 10p. So instead of coming here with my begging bowl in 9 months' time or next year's junior Indaba, if invited, and asking you, I'm raising money now, I need, the equivalent of £500,000 from my South African investors. No, let you guys get involved early. Build the story, build the trust. And as some of the speakers yesterday were saying, Michael Rotniak was saying, look, a good management team can turn a bad mine into a decent project. I'm not quite sure I believe that bit, but a bad management team can wreck a good project. So we're looking to restart 2 really good projects. What do we got? Rukwa. Rukwa, it's just over the lake from you, Jonathan. So if you do need to get out of DRC, we can send a boat over Lake Tanganyika. So right down in the bottom left-hand corner of Tanzania. It's a restart. It's going to take $130,000, $150,000 to restart this mine. It's a coal producer. It's more for the cement and power locally and regionally. A lot of the export goes into Rwanda. We're going to get it back up to the 4,000 to 5,000 tons a month that it can do and has done in the past. I think I've only been in the seats or in the chair 4 months. There was a change of ownership, there was a change of shareholder, and the previous board they resigned. And this is a restart. It's been unloved, there hasn't been the funding, and as you can see, a very small amount of capex will get this thing back up and running again. 5,000 tons a month for the washed coal is sort of 3 million a year. There's 60,000 tons of fines sat on surface.
So
that runs.
Sorry, I misread your capital. So that is $150,000.
Yeah, it's nothing.
150.
We've already got that.
Million. Yeah. Sorry, I so misread it. I was in shock, but I was out.
The big one's Kabwe. We'll get on to the big capex.
Yeah. Okay.
So it's a small amount of money to get this thing back up and running, and I, for the life of me, don't understand why it was unloved, mismanaged, whatever. 60,000 tons of fines sat at surface. The sales price for that is sort of $7 or $8 a ton. Well, 60,000 times $8 is about $450,000. So that's already, the guys on site now, they're selling it locally. So my capex is covered for this one. Here's the path, if you like. There is larger capex. So we need to retest the wash plant. There's about 63 tons on surface as well of the previously washed coal. Bung that back through the wash plant, retest it. Things like putting new batteries into the excavators, new nozzles, et cetera, all pretty simple stuff. Repairing the odd bridge, repairing the odd road on site and get it back up to where it was and should be. Beyond, if we want to put a parallel wash plant in, now we're talking, you know, an extra $1 million. And once you're up to 5,000 tons a month, the sales there are sort of $3 million a year. The big prize. This is, as Michael Rotniak said yesterday in the funding discussion, get some early cash flow. Rukwa is going to provide us with the early cash flow. The big prize is Kabwe. If you haven't heard about Kabwe, you know, it was opened in 1904 by Anglo-American. It ran for until 1995. It got taken over by ZCCM in the mid-60s. It's a world-famous mine. It is Kabwe. It was where the Broken Hill Man skull was found. Well, I hate to say this, in the 1920s, they actually found the whole skeleton. They lobbed the skeleton in the smelter because it was full of zinc. And then they looked at the skull and went, "Ooh, that looks a bit old." So that's in Pit 6. One of the, you know, the ESG and all the rest of it we heard yesterday is one of the most important things. I want to build a visitor center there for the local school kids, the university students in Lusaka, the Americans, the Germans, the Japanese, they'll come flooding. And it's one of those things, we're not going to be able to mine in that particular area of that pit, but it's one of those things that you need to do. And there's a lot of history in Kabwe. There's a lot of lead in the system there. Those sort of things need tidying up. And that's, you know, that's one of the goals as well. It's about 3.5 hours north of Lusaka. It's just below the copper belt. It's sort of the crossroads of Zambia. It's a cracking area, but the mine really needs some love and attention. And as I say, the strapline breathing life into Kabwe and Rukwa. There were 5,000 people employed in that mine. And we want to get it back to that point. All the infrastructure's there. This was going to be slide 7, but it's my Lily Nupin slide because it's got a photo of the cadastre system from yesterday's debate. The cadastre system does work well in Zambia. You do have to keep an eye on your license because they can change, they can disappear, they can move around. I think the debate yesterday for South Africa was to get a cadastre system going. That might take 20 years or so, but good luck on that one. So that's what we've got. We've got 33 square kilometers. Basically, the bottom left-hand corner of that etched area is the Kabwe mine itself. And from the CPR, we have Bear Dobert here in South Africa have done the CPR. We've got nearly they mined 15 million tons between 1904 and 1994. And that was valued at about $8 billion in 2021 prices. That was nearly 2 million tons of zinc, nearly 1 million tons of lead, 8,000 tons of vanadium oxide, and I think it was 87,000 kilograms of silver. The resource we have at the moment, which we think is understated, what geologist has ever said their resource is understated, their share price is too high, or we've got an average project. I don't think I've ever heard that. But no, the estimated total resource at the moment is about 7 million tons at 14% zinc and about 3% lead. It's a world-famous mine. And then you've got the vanadium, you've got the silver, and 2 or 3 elements that probably weren't even on the periodic table when Anglo-American opened it in 1904. You've got things like gallium, germanium, all in your cell phones, et cetera, et cetera. So all these byproducts are going to be available to us. We'll add the extra value to the project. The trick will be the chemistry set. How are we going to separate all those things? And that's kind of where we're going to head. This is pit 2 where we'll start. The total contained metal in the ground is $4 billion. Our market cap is 3 million quid. You can do the sums. Okay, we've got to get it out. This chart is just telling you, look, if there's bottom side there, there's $4 billion worth of contained metal, just discount it by half, that's $2 billion, and then a net profit margin of 25%, you're still talking $500 million of net profit for a market cap of 3 million. And it's also now available on the JSE. There's some pretty pictures for the geologists. The blue area is the bit that's been mined out, and the red areas are our target. That's what we're going to drill. I've raised 2 million quid to do this drilling. That'll commence in probably July, August of this year. I've got 7 seconds, and there's the pathway to what we're going to be doing. So keep an eye on it. Kabwe is going to be back to its former glory. And look, it's available on the JSE. As I said, that's why we listed last week, to enable you guys to follow the story, follow me, follow the management team, and get stuck in. So I thank Patricia, I thank Bernard for inviting me here, and open the floor to questions.
So with no pressure, because he's not looking for your money, you can express your views in the meantime. I find these mines with this specific history so interesting, so nationalized. 20 years later, shut down. It's inevitable. That's the history of that whole copper belt and that part. You say, however, it was shut down due to metal prices. What are the prices today relative to 94 when it shut down?
About 80% higher.
How much?
80% higher.
80% higher.
Plus their cut-off grade was 10% zinc. The DRA, apologies, DRA, I haven't employed you yet. The Competent Persons Report thinks that we can run that now with modern technology. I think it was James Campbell said yesterday, every time there's a technological breakthrough, I think it's a Bristow quote, the expiration clock starts ticking. We don't need much of a technological breakthrough to drop a cut-off grade of 10% zinc down to 3 or 4, and to reopen a mine, that is world famous with those grades, with 15. I mean, I've taken some samples already in surface where the artisanals are working, who we are going to embrace and re-employ, which they're desperate to do. And we sent them to the labs here in South Africa, and it went over the detection limits of 30%. So they've now gone off to Vancouver. They could have told me their detection limits were only 30%, but anyway, we found that out. So look, there's surface material, there's 6 open pits, and it's not going to need new technology, it's just going to need 20th century technology or 21st century technology to reinvigorate this.
And what is the regime with in that area? How would the government participate in this? Ownership and or royalties and or just normal taxes?
Yeah, 2% net smelter return. The ownership is 14%.
Free carry.
Free carry. But the support in Lusaka from the Minister of Mines, from the President, and obviously the local district commissioner, it's so politically in the spotlight for the whole country. Yes, you've got the copper belt, but Kabwe is the mine, or was the mine, and they want to regenerate. I mean, as I said, it employed 5,000 people. At the moment, there's probably 60 artisanals running around, scratching a living, and they want their jobs back. I spoke to one guy, he said, I was an underground blaster. I'd like my job back, please. We do have to dewater it, though.
Yeah, no, I can see. We've stirred up the geologists again. So what will be the expected new drilling depth? What sort of type of holes do you need to drill?
I don't know if we can go back to the... No. So the section I showed, the current workings go down to 1,650 feet.
So are you going to drill from there once you've dewatered, or are you going to
No, you can
drill from surface? Yeah.
So the drilling was done in the 50s and 60s, which isn't really JORC compliant. I don't think JORC existed in the 60s. So we will mirror some of the holes that have been drilled previously. So 1,600 feet for the non-dinosaurs in the room is about 500 meters. So that's 6 or 7 holes down to 500 meters. We've already got a drilling company lined up. They're going to drill some of it for equity, which is always nice. And probably HQ drilling, wide stuff, so we can get the structural geology worked out and do a lot of metallurgical testing. You're obviously going to hit a few voids because all the underground mining infrastructure is there, so you've got to be quite careful as you drill. So there's no point doing RC drilling because it'll just blow out. So it'll be diamond drilling. And yes, I'll start in probably July or August when we mobilize the rigs.
Okay, we're going to run out of time, so let me pick a few quick questions here. So what is the key activity to get Kabwe to start up? What's the one big thing you need to do next, I suppose?
First is getting all the information together. There's a host of information, as you can imagine, whether it's Anglo Archives, ZCCM, people like Peter Hibbard, Edgar Stetler, who's the geophysicist, who's South African. Getting those people involved. Get all the data. We've already got the 2D GIS happening with GeoQuest, who are the consultants in Lusaka. Then it's geophysics, then it's drilling.
Whilst we look at the results of the audience, the historical pollution concerns, have you inherited?
No, we haven't inherited any of that. Those are, yes, there is a litigation going on at the moment with Anglo American. You're going to have to be careful. There will always be the ambulance chasers, but we're not inheriting any of the dumps or any of the surface material. Yes, but you know, you go in there, 1904, probably ESG wasn't even heard of, let alone looked at. So it will be remiss of us to go in there and go in blind. We want to find our baseline levels. Lead is an issue in the area. Find your baseline levels and then just improve it.
Ladies, gentlemen, the one thing I really suggest you pay attention to is you sometimes go and list in a jurisdiction which may be important in your future. You start to tell your story. You build your credibility years before you come for money. IPO is a legitimate way to raise money, but you are very dependent on whether the market is ready or not. So well done for listing, for inward listing, for tell your story, and we'll have you back. Next time you'll explain your bloody share price, which I don't understand.
Well, you can destroy my credibility next year. Thank you, everybody.
Thank you very much. Thank you. Thank you. I think we've got a glitch in Slido. Eh? The results are already in for the next speaker. I mean, it's always 58, 34, 8. Come on, guys. You are so eager. Okay, then. Okay, come. I don't know, these guys mine, flipping manganese, how did they sneak in? Huh? Let's listen, update from Jupiter. Thank you very much. That's your 10 minutes.
Cheers, thanks. So it's interesting, when I started my career, we were always told that how to destroy a good junior mining company is to dig a hole in the ground. But I hope that we can bust that myth today, because Jupiter has invested in an asset that has done exceptionally well. And I thought when I started out this that I didn't need to give much of an introduction to manganese, because it's probably the most widely spoken about commodity in South Africa. Or I need to caveat that, probably outside of Emalahleni. But you know, talking to delegates and investors, it's clear that there is a bit of a mystification around manganese and what does it really mean and what is it used for. So I thought I'd better give a bit of an introduction as to why manganese is important and why Jupiter in particular has found favor in this. Manganese is probably the 12th most abundant commodity in the world, although it average grades around 0.2%. So to find meaningful resources and grades of the 30 to 50%, you've got to look at certain jurisdictions, and very few areas actually have that commodity. So South Africa being a predominant one, with Australia and Gabon. But just delving into a bit more detail, we can see that South Africa mines about 36% of the world's manganese currently, followed by Gabon and Australia, and then the rest of the world. But just unpacking that more interestingly, which will talk to my story a bit later, is that like our Witwatersrand gold reserves, South Africa actually holds 73% of the world's reserves. And interestingly enough, the others, Gabon and Australia, are fast declining and running out of reserves to mine. So this talks about an interesting point for manganese. So we've seen an interesting trend over the past sort of 7 years of actually manganese prices declining down to a sort of floor level of about $3, $3.50, which perhaps does it bode well for an investment case? Well, there's a couple of reasons why this has happened. One, we've had new mines open. For example, Gabon, they have increased their production. We've seen in South Africa an increase in the landscape there with the mining, which I talked to just now. But South Africa's had an interesting change in that where the Kalahari manganese field is located, it is fairly accessible to almost every single port of exit in this country. And as such, it's enabled junior miners to get logistics, and they're all out the country, whether through rail or road, but it's an easy haul. South Africa is also, by virtue of the largest producer of manganese, the marginal cost producer. And that is where the price settles at. So Jupiter, being a pure play manganese company, is going to naturally follow that trend. Although you do get sort of extreme events like the cyclone that passed at Gemco last year, which did give a bit of a tailwind to the price. That will be temporary given the supply that can match that, or the sort of knowledge that Gemco will continue. Right, so we've also seen bit like the sort of gold rush of 1885, the mass jump into the Kalahari manganese fields of mining companies. Historically, there were two big ones, Samancor and Assmang. We then had Tshipi, which started in 2012, and since then we've had a flood of smaller mining companies open up, chasing the manganese story in the Kalahari. Again, manganese being such an important commodity for steel. And I'll just talk a little bit about why manganese is so important. For those of you that understand the industry of steel, manganese is about 1%. Its intensive use is 1% in steel. So it doesn't sound like a lot, but it's absolutely critical in the steel industry in that it provides the strength and flexibility for steel as it is today. And the quality of the steel is dependent on the manganese content. So if you equate that of the 2 billion ton steel market, we're using an intensity of about 1%. That's about 12 million tons of manganese metal or 60 million tons of manganese ore today. So that means out of a global reserve of 1.7 million tons, where do we then see the value of this? Because there's just so much of it around. Before I come to South Africa and its importance, I think the most important thing is that manganese is actually not a recyclable metal. When they recycle steel, you have to re-add manganese metal into that. We've also seen a shift in the quality of steel, particularly in China, where the increased use of manganese is required. So the silicon manganese standard has improved, and that again improves the demand for manganese as a metal. And I dare say, in other industries, manganese is also finding a bit of purchase, although it's at a very small level. If I think batteries, it's probably going to be 3 to 5%. But as we reach a saturation point in South Africa, we are still seeing a few of the existing mines here also getting to the end of their life, which means that there will be a bit of a capacity uptake. And we see the likes of Gemco that will eventually, although I've been with BHP Billiton I was with BHP for 15 years, and it always had a 7-year life of mine. But that 4 million tons will be hard to replace immediately. So we do expect to see some price improvement at that point in time. But while we wait for the great supply-demand balance inversion to occur, how do we leverage value from our existing assets? Now, Bernard, you asked an interesting question on Mr. Luvengo yesterday. He said, how does junior miners expect to mine a deposit or resource better than the major that they've acquired it from? And I think Mr. Luvengo had a very good response to say that we need to look at all aspects of that value chain. So junior miners don't necessarily have the deep capital and the purchasing power to insource their mining, and they are at the mercy of contractors. But that leaves them the opportunity to then focus on the more value-adding aspects of our business. And I think that's where we as Jupiter also need to find a little bit of value in our business. So manganese, like anything, has multiple uses in the industry. 37% manganese goes straight to the iron ore and the steel industry. We are finding a growth in the battery industry. And in Jupiter's case, we have a low-grade resource, which we call low-grade resource, a byproduct 30% manganese that's been mined, which the shareholders took a strategic decision to stockpile, and that would come at a zero-cost feed for other industries. So what is Jupiter Mines? And Mr. Chairman, let's just get to the point that it's not the F#*! Valterra you're looking for, but it was born out of hard work, as Lil Newpin said yesterday, with all the sort of cadastral work you had to do in the past by the late Mr. Justin Pitt and our Malume Makazoma and Mosh Ngosheng, together with a bit of sprinkle of the greenbacks from ex-BHP Billiton, Mr. Gilbertson's Pallinghurst Resources. Now, bearing in mind, old Brian Gilbertson unfortunately had to watch this crown jewel be stripped from his Billiton asset during the great mineral rights heist back in 2002. So I think he was keen to reinvest in this. But that's essentially where Jupiter began. Jupiter listed in 2018 and has delivered a superb return in the form of dividends over the last 7 years, equaling nearly 140% of the company's value. It's headed up by a very competent board of directors who have the requisite skills, particularly pertinent to manganese. So we have the areas of logistics, the area of marketing, the area of operations. And those are very important in terms of delivering value in a very tight and a very saturated market. Our shareholder base is also equally covered by a retail base that provides liquidity. It's got investors that are equally keen to share the vision of manganese, and particularly in the case of POSCO in the battery sector. So the future looks bright for Jupiter in terms of its shareholding. Tshipi Mine is our asset. We have a half share in that. Tshipi Mine was set up to mine about 3.5 million tons. Can expand that, But when it was developed with all the correct infrastructure from the processing right through to the rapid load-out logistics to enable us to respond quickly to market changes in the industry. As mentioned, we use all the ports of access. In fact, one of the huge benefits we found is through Namibia and export 1 million tons through Lüderitz. So Jupiter itself has found, it's looking at a strategy, working with the shareholders, to become the fittest in the field, an industry leader, focus on the sustainability portion of mining, and also look at where we can upcycle or use our products better. Becoming the fittest in the field, we'd look at the logistics aspects, as well as streamlining operational performance and rehandling. But just to give an example of the upcycling side, so we've all talked a bit about the EV battery space, and Jupiter's no different. With that 30% ore that we mine and stockpiled, there is a value there we can use to extract an upside for the project. Now, the EV batteries industry is in a lot of flux state at the moment, and nobody really knows exactly how far it's going. But we do know that manganese does have unique properties for batteries, and particularly around enhanced energy densities, improved thermal conductivity, make it a lot safer. The two areas manganese are used, nickel, cobalt, manganese batteries in Europe, or now more increasingly lithium, manganese, iron phosphate in China. So there's a huge potential for that. Again, if you believe the benchmarks and the Bloombergs and the forecasts, we're likely to see a large deficit of manganese in about 2030 in the space of about 400,000 tons of contained metal, equating to 1.5 million tons of ore. So the trick is to get into that industry, and if you can get in early enough and secure the offtakes, well, that's where your advantage will be. Again, I've talked about the cost advantages we have on the ore side. So for Jupiter, it makes sense to look at a project like this, and we're going to continue to progress it as we follow the industry growth. Again, strategic benefits we have, a bit of vertical diversification for us. It'll continue to commit for our ESG principles. We will invest in relationships with our investors. Jupiter is also one of the first or only pure-play listed manganese companies. We like Kalahari. We believe that the manganese sector has got poised for growth. And I think, as you've all seen recently, this view has been shared by Exxaro, who have recently acquired a stake from Minson to be our new partner going forward in Tshipi. So I thank you for your time.
Thank you very much, Matthew. Guys, you can't invest in this unless you go via Australia, but click on that anyway and express your views. There was a question, it can only be from Patricia. When will we see Jupiter Mines list on the JSE? This will give South African investors access to the company.
Geez, it's a good question. It's not something that we've taken lightly. I think there's been a lot of focus on how Jupiter increases its offering to the South African investors. And in fact, I think prior to Exxaro coming in and making an offer, it was one of the options that Jupiter had considered looking at as potentially a bigger industry package. So I think what we're going to have to now do is just have discussions with Exxaro in terms of their strategy and what they would like to do in the industry. And from there, we will then sort of set our base in terms of where Jupiter goes with listing in South Africa.
Because that's the next question from Anonymous. Will Exxaro buy Jupiter next? Because you stand here on behalf of Exxaro, so answer the question.
Jeez, can I defer that to Exxaro? Look, I think you've all heard Mr. Magara say that he's going to focus on the Exxaro acquisition of Zinc-Lead share. The strategies in terms of growth in this, who knows? They have set an expectation on value, but there's been no indication at all of them acquiring Jupiter, and in fact, they may never do it. Maybe there's all sorts of strategies that I think Exxaro will want to work with before they look at that.
So what is Jupiter beyond Tshipi?
So there's two parts to this. I think Jupiter would like to grow its footprint to become an industry leader in the manganese space. So that's two parts. We like the Kalahari. As I've pointed out, there's a huge amount of potential there. In fact, South Africa is always going to be the growth aspect of this. So the key focus is to find something else in manganese to grow and diversify with. But more importantly, do we look at the upcycling and upstream or downstream processing of manganese in other forms? So I think Jupiter would like to grow like that. Again, Tshipi is a great base for us to work with that, and no doubt we will find new acquisitions that we will continue with going forward.
I don't have to disclose to you, but to the audience, I'm deeply vested in the manganese downstream. I like this space. I have some views. 2 years ago, when Brad presented, I think you guys were busy doing some pre-feas or feasibility, and I thought he was extremely bullish about the space and your commitment to it. Now, you didn't land a lot on it, but you're a lot less bullish about high-purity manganese sulphate as a big next step. Have you changed your views? Do you want to crystallize some of your views? You still speak to it as a beyond Tshipi sort of part of your strategy.
Yes, yes.
Perhaps a minute version.
Sure, Bernard. Look, I think the EV battery space is definitely a lot of value. It's you know, having come back from China recently, it's something that is very well understood in China. It's a product that's easily produced there. When we set out to look at this, there was a lot of hype in the US around IRA and critical minerals, but having had deep discussions with industry players, there's a little uncertainty around where manganese is actually going to grow to. So we've taken the view just to slow our study down a little bit, just to sort of keep in line with the step of the markets and then the European car makers. But certainly a project that we're very committed to and would like to continue and see right through to final execution. In fact, from a perspective, we just completed a pilot plant work with that, so we've now ironed out a lot of our technical challenges with that, which is great. So,
Ladies, gentlemen, where did the 60% land this time? Oh,
jeez.
I'm going to really, I mean, you're a boring audience full of geologists. This was my final conclusion. You tell a good story. Congratulations, and thank you very much for coming back.
Thank you very much. Really appreciate it.
Thank you. Thank you.
Thanks all.
Okay, so I was the nice guy. I found something pleasant to say about every single company. We'll hear what this dude's got to say. His name is Paul Miller. He's not my friend. If you don't like him, it's okay with me, okay? Mr. Miller, sir.
The question is, are you the court jester or me?
I know my role, so you play your role. Go for it, dude.
Okay, so I'm Paul Miller. I wear a variety of hats. One of them is that caused me to recently write the phase regulatory exams. So I have to be very clear that nothing I say is either true nor investment advice. But I'm going to use that opportunity to quick drop a commercial here. The reason I wrote a phase regulatory exam is that I'm involved in setting up a direct-to-retail capital raising platform for smaller companies with listings on any one of our number of stock exchanges, and it's called Uchalo, which means to plant or to plant a seed. We're trying to find a way to fix what our policymakers refuse to. Okay, so it's my job now to provide a quick off-the-cuff critique of the presentations you've just heard, and I'm supposed to, I don't know, as I said, be the court jester and speak a little bit of truth to power, so to speak. So I want to tell 4 stories, and the first one is about surfing a wave. The second one is about Schadenfreude. The third one will be about plumbing, for some reason, although it will be financial plumbing. And the fourth one will be about political skullduggery. And they relate directly to these 4 companies. So surfing the wave, if you look at the price of uranium over the last 10, 12 years, you'll see the peak immediately prior to Fukushima, you'll see the trough in between, and you'll see a peak that we're currently in at the moment. And the question is, if you were sitting on a surfboard and the set coming in at J Bay only had 1 wave, are you going to be able to take that ride or not? And I can tell from personal experience, having worked for a funder of uranium mines, both Kalahari and Lange that came out fine, you should pay very careful attention to the uranium company you invest with as to who else invests with it and what instrument do they have. So the famous case, obviously, was Paladin, who developed Lange and developed Kalahari, but put a massive, great big convertible bond into its capital structure. So when the trough came between the waves, the debt was converted into equity, and the equity holders were left with nothing. And that's the problem when you have these very high peaks. So that's my non-advice to you, is if you catch the wave, it can be the ride of a lifetime. But pay very careful attention to where you sit in the capital stack for the company. Yes, I don't know whether we've missed the opportunity already or if it's still ahead of us. Just one point that needs to be made is that there are a number of mines that were built in the last boom that went into care and maintenance in the trough and are being brought back into production now. So the question you have to ask yourself when looking at the uranium companies is, what's the relative capital intensity for each pound of yellow cake? So are those mines that are being brought out of care and maintenance, who also need a $60 a pound price, what is the capital intensity of each pound that they're going to produce? And it's clear that Kalahari in Malawi and Langer Heinrich, I think, is already back in production. So that's a crucial question there. There's a lot more we can say, and I think one of the very important things again about uranium is that it's not so much about the spot price, it's about who you've contracted your production with. So that's something worth looking at as well. There's more than one price in the industry. And then just to say that there is actually a pure uranium play listed on our local markets on the A2X, and that's Neo Energy Metals, I think it's called, and that's looking to develop uranium projects here in South Africa. The second story I want to tell is about Schadenfreude, and that's about Greenfield's projects in the DRC. Rich Greenfield's projects in the DRC. And myself and Boris Kamstra took Alphamin resources to the institutions, the clever people in Cape Town, those at least who would agree to see us. At the time, it was a 2 billion rand market cap company. And some of them cancelled the meeting after we had traveled to Cape Town. And I took great pleasure, the Schadenfreude, sitting watching from a distance with my own little shareholding of watching that company go to 11 billion rand and knowing that not a single South African institution, all of whom had the opportunity to participate, chose to. And I think that's a question that our institutions need to answer as to why they let that get away. So the question then is a Greenfield's copper deposit 35 kilometers from Lake Tanganyika going to be something similar? And I have to say that 35 kilometers from Lake Tanganyika is a lot better than 35 kilometers from Walikali, if you can find that on a map. And Boris knows because he walked that 35 kilometers before there was a road. That's fantastic, you know. You are actually effectively a barge trip from a lake port in Zambia. And I think a lot of Greenfield's discoveries, particularly remote ones in the DRC, are logistics is everything. You don't have electricity, you better have a way of getting your diesel in to run your generators. So that's an interesting one, and I'm going to watch that with interest. And hopefully we can persuade, if it advances somewhat as a private company, when it eventually hits the public markets, should the Chinese not buy it first, that we can get local institutions into that. Then I want to tell my story about plumbing. And the plumbing is the financial plumbing that has advanced, that allowed Shuka Minerals to come to the JSE and trade on its first day. And it's not insignificant. I know it's arcane stuff, and not many people put their heads under the hood and have a look at how shares flow between exchanges. But I was the JSE sponsor executive on Aquarius Platinum, which was the first inward dual listing on the JSE. We now have 20% of our stock exchanges inward dual listings by count and over 60% by market cap. And what surprised me very pleasantly about the Shuka Minerals listing is shares can now move between London and Joburg in 4 minutes. And that means that a broker in Joburg can bid for shares that are met by an offer in London in real time. So there's no longer a question about it being liquid or illiquid here and liquid or illiquid in London. It's one pool of liquidity, and I don't think enough people fully appreciate that. So I have it on good authority that those shares that traded in Shuka on the day that it listed it was an offer in London being met by a bid in Johannesburg. And there's a massive double there. The arbitrage is huge. So I think that's hugely encouraging, particularly for those of you who have got listings in London. I'm hoping that the plumbing is going to be put in place for Canada and Australia too, and we can have one global pool of liquidity. And then my final story of political skullduggery is we must be careful, and I'm afraid this is where pessimism comes in. The Kalahari mining manganese fields. If you scratch deep enough, you find a story of where Asmang and Samancor Manganese, as it was at the time, which is now Samancor Chrome, lost their mineral rights at the transition from the old order to the new in 2002 in a very strange way. And what we subsequently saw was a whole lot of mining rights given to constructed consortia of ANC grandee families, local consortiums, where it was written into the license conditions that they had to be 51% black owned into perpetuity. So let's not pretend that the outside partners in the Kalahari mining field are 50-50 partners. They're not. They're 49% partners. And as far as I know, those mining rights have a condition written into them that they have to be 51% black owned into perpetuity. So bear that in mind when you think corporate actions around your valuation on those shares. And I have to think that the 49% that Jupiter is now a takeover target by Exxaro. Remember that Exxaro already owns, or will own, once it takes over the Tshipi shares, the maximum it can in Jupiter. So that's going to be really interesting to watch how that plays out. It's really been sad, though, that a strong dividend-paying company has not been listed locally and hasn't been an opportunity for our institutions to participate. I must say, if the plumbing gets put into place where the shares can move instantly between Australia and South Africa, then there's very little excuse. One final point on that, we don't only have the JSE in South Africa, we've got two other licensed stock exchanges, and the A2X for 2 years now has had the license to take dual listings of companies that are listed on foreign stock exchanges too. And they will take your listing at zero listing fee. So we really want to see that happen. Last point on Forsys Metals, that's interesting. A lot of people never gets mentioned, but it actually has a secondary listing on the Namibian Stock Exchange. And the question then is that could we not put the same plumbing in place? It's within the Rand monetary area. It's available for trade in Rands. Perhaps what we really need is to get people trading on that stock exchange too. So that's all I have to say this round. I'll see you after the next panel.
Thank you, Paul Miller. Thank you very much.